Well, let's do one thing. Let's also talk about Cummins India. It was a very strong quarter for the company. Highest quarterly revenues and profits based on robust domestic demand. The stock, in fact, shot up after the numbers as well. Their domestic sales are up 36%. Ashwath Ram, who's the managing director of Cummins India, joins us now to talk about that. Mr. Ram, thanks a lot for joining in. It was a very good, growth that you saw in this quarter, and I understand that you continue to hold on to this double-digit revenue growth guidance for the full year. But can you tell us how has demand been across your segments, and what do you see as the big trigger for the company going ahead?
So demand has been very robust, especially domestically. And the demand has been very strong in our power generation business, especially in areas like data centers, residential realty, commercial realty, manufacturing, and infrastructure. We believe this will continue till India continues to build its infrastructure out and continues to make investments in building roads, bridges, ports. Just the whole infrastructure play is very positive from a Cummins perspective.
So when you say that demand continues to be very strong, right? In this quarter, your domestic growth was 36%. Do you think this is something that you can replicate in Q4 as well as in the first half of FY25?
The growth has been, like I said, it has been strong, mainly driven by the infrastructure spend. It depends on whether the spend continues. We have elections coming up, so there is likelihood that there is some tapering of spend there. Also, road construction, which was very, very strong in the previous quarter. We expect to see a little bit of softening in those spaces. But when we look at it from a medium to long-term perspective, I think this kind of growth can continue.
Private capital expenditure. Morning, sir. Prashant here. Private capital expenditure needs to pick up now, right? The government has done the heavy lifting and, they're taking a bit of a backseat now, and rightfully so maybe. Just a quick comment on margins for you. You'd guided for a 100 basis point improvement in margins. Are you on track, or do you think with commodity prices starting to harden at the margin a little bit, there could be downside risk to that?
We guided that we would grow 100 basis point year on year, and so far we have stayed ahead of that. As a matter of fact, we have grown a little over 250 basis points. We did get the trifecta of advantages this year and in this quarter as well, in that the commodity prices continued to remain soft. The price increases that we had taken in previous quarters, we continued to hold on them. And the third is that the cost reduction actions that we have been constantly pursuing continue to yield us benefit. Now, moving forward, not all of these variables are going to remain positive all the time. So there will be more pressure on margins, but it is management's endeavor to continue to keep striving to grow the margins year on year.
So what could be, where do you see sort of margin settling at? Broadly, without being very specific,
see, in this
as we look into FY25, yeah.
Yeah, see, this kind of business is very, very competitive, and we already have a differential margin as compared to our main competitors in this area. And I think we are going to be able to maintain the differential. So we think that the margins we have achieved now are some of the best that are achievable in this kind of business. So we expect to hold or maybe do a little bit better, but it's not going to be as straightforward to get the kind of growth in margins that we've gotten for the last year or two.
Your distribution business has grown very well too. It's up almost 26% in the first half of FY24. How was it in the quarter gone by, and what is the expectation? I mean, what kind of growth are you seeing there?
Yeah, so the biggest growth has been from the domestic market. As a matter of fact, our export markets have dropped significantly. They have dropped as much as 40% in some markets. So when you look at the global market, pretty much all the big markets, Europe, Middle East and Asia, Asia Pacific, Latin America, all those markets this year for us in power generation have dropped up to 35-40%. And despite that, we've had growth mainly because we have been helped by the domestic markets all across. So whether it be power generation, whether it be defense, whether it be construction, mining, compressor, all the markets that we play in India have been firing all cylinders, and that's why we've been able to offset the slowdown in exports and still have pretty strong growth.
Have exports bottomed out, sir?
We think so. It's difficult to predict, but we think it's bottomed out. When we look at the outlook, it looks like some markets are beginning to come back because they're coming back from a very low base. So these are early indications, but it looks like we've bottomed out.
So for F5, I mean, would you want to hazard in the ballpark some guidance there on the export side, or too tough?
It's very, very tough, and every time I go to hazard a guess like this, then some new crisis crops up. Like right now, we are facing the Red Sea crisis, which is causing us to get raw materials are delayed by 2 to 4 weeks, and our shipments going out are delayed 2 to 4 weeks. So it's a little difficult to predict from a quarterly basis, but when we are looking at it from a medium to long term perspective, that market also we see having positive growth for us. We have launched many new products. We are attempting to enter other markets. We have new products which we developed in India for CPCB4 Plus, which can be sold in other markets around the world. So the medium to long-term outlook, even on exports, is extremely bullish. And we do have a cost advantage in India for the same products as compared to other markets in the world.
All right, we will let you go on that note. Thank you so much for joining us and speaking to CNBC TV 18. Well, that's the word coming in from Cummins. The stock had a big move, but